Hello, everyone, and welcome to another one of our Better Investing online tools tutorials. Tonight's session is entitled Easy Research Using the CoreSSG and SSGPlus. And our presenter this evening is Susie Artsberger. Susie is our Director of Information Technology at Better Investing, as well as the product manager for these very fine online stock tools. She does lead the team that develops these products, and so really I cannot think of anybody more expert than Susie Artsberger to lead us through this. So Susie, I'm going to turn things directly over to you.
Well, thank you, Anne. I know a couple people who would do a fine job at this, so maybe we will hear their voices next time. But for tonight, you get me. So I thank everybody who signed up for the webinar, and I especially thank our volunteers and backroom staff that make this possible. So tonight, we are going to be talking about researching a company through our stock selection guide tool, either the CoreSSG or SSGPlus. We're going to be talking about a company because I'm going to put this in context of a stock selection guide. To that end, always do your own research. Like I said, we will be looking at a company, but please don't go out and buy it. We are also going to be looking at a number of websites, and they might be sites for products or services that are linked from our tool, but not necessarily endorsed. So just be aware of that. And this session is going to be recorded for future use. So if you have to leave or you arrive late, we will be posting this on YouTube within a day or so. So let's kind of frame tonight's webinar. We're going to use a tool to research a stock. Tonight's tool is going to be the SSGPlus. We're going to be mainly looking at the research within the tool, as well as the links that are available through our research links. Those research links are the same in CoreSSG. The concepts are the same in CoreSSG. So I could have done that in that tool, and for many years I did, but tonight we're going to use SSGPlus. Now, while we're talking about the stock selection guide and research links, we're also going to actually perform a very quick stock selection guide. I say quick because we're going to get it done within this hour or so time frame, and we're not going to be spending a lot of time on judgments. Judgments take a little bit more. So we kind of assume going in here that you know how to get around the tool and that you're somewhat familiar with our stock selection guide methodology. As we go through this, we are going to note which research links are applicable at each step. So tonight we have a very handy handout. In the handouts are two documents. One is a PowerPoint presentation handout view, and it has a bunch of hidden slides that show you all the research links that I'm going to be taking you through. The other one is a first cut form for the stock we're going to be covering tonight, Biogen. And I've already got judgments in there because we're not going to spend a lot of time on judgments. So please take a look at that handout material as the reference for what we're doing as we go through here, and it's also a nice takeaway if you're looking at what research is applicable to what steps of the stock selection guide. We love questions. We have a back room able to answer your questions, so please submit any questions that you have as we go along using the question panel. We'll stop occasionally, or Anne will interrupt me, and we'll get those answered out loud, or our very capable backroom staff will handle those behind the scenes. Then I talked about the recording. So these tutorials, online tools tutorial recordings, are all available on our YouTube channel. So that's youtube.com/betterinvesting. Hopefully it'll go up tomorrow. We usually can get them up the next day. If not, within the next couple of days, like say Monday, and you will get an email, a post-webinar email within a day or so that has that link. But if you want to look at what's out there already, go to youtube.com/betterinvesting. If you're looking for those handouts, I'm going to point you to the GoToWebinar control panel, and there is a handouts tab that says handouts 2 of 5. and then you can pick from there. So moving on, I talked about the fact that we weren't going to do a lot with the nuts and bolts of the methodology proper. Tonight's webinar is about what research do we have available for you, and where is it located, and what step of this SSG can you use it at. If you want more information about our methodology, about portfolios that you can use in the tool, about screening, quarterly data, here is a list of references, and they are in the handout as well. Our stock selection guide methodology, we have a great intro series of 4 webinars that is available from our member homepage under education, and it's called under the My Classes link. It's part of your membership, so please make yourself familiar with that if you need some help with just what is the stock selection guide that I keep talking about. And again, there's a list of references on other things. We are going to be using the SSGPlus tool today, so let's get a little bit familiar with what could be a little bit complex looking when you go right into the tool. So this is the first page under Analyze Growth and Quality, and it has a graphical display of the data in the middle, a table of data at the bottom, which is pretty much a duplicate of what you're seeing up top, a legend so you can turn on various other data points, a box for quarterly figures, a box for analyst consensus estimates, so EPS long-term, sales 2-year, we'll be talking about those. A menu at the top, we're going to be dealing with this quite a bit tonight, and tabs along the side. So our Core or Plus memberships actually have a number of tools, from managing your studies to searching for stocks to using our stock selection guide. So you can see that we are working right here in this green box where it says SSG, and we have our SSG Plus at the top. I'll also point out in the SSG Plus tool that we have multiple tabs, and we have multiple tabs at the top in the Core SSG tool. So we can see those at the top, and there's the first tab, which is what we're going to start with, Analyze Growth and Quality. The second tab, Valuation and Return, and a third tab for quarterly data. We'll hit each of those, not so much on quarterly data, but we'll hit each of the first 2 to get our stock selection guide done. And finally, what you need to know as we go through here, that any place that there is a green box, that would be where you are supposed to enter a number and do your forecasts. So watch out for that. Now, if this is moving too quick right now and you don't know all the pieces of this screen, we do have a separate tutorial called the SSG Plus tutorial, which shows you the nuts and bolts in more detail of getting through a stock selection guide using this tool. We also have a Core SSG tutorial. If you are in SSG Plus, you can switch to Core SSG by clicking right up here. And the Core SSG tutorial on YouTube shows you the nuts and bolts of completing an SSG using that tool or that view. So hopefully that makes sense so far. This is the screen without all of the pieces on it. So this is what it's going to look like when we open it up, except instead of raw stores, we're going to be looking live at Biogen. And as we go through, we're going to be paying particular attention to this research menu item. When I click on that research menu item, I will see a number of other options, various buckets of research, if you will. To get into those and drill down farther, all I need to do is click on one of these, and I'll see that I'll get a flyout panel of other options. So that was like a 3-step or 2-step process. Click on the research link and then click on the topic to get all of the detail from which I can choose. Now these are company-specific links. So while we're studying Biogen and I want to go to the company website, if I clicked here, I would go to the exact Biogen website. And then if I clicked on Yahoo Analyst Estimates, I would go directly to the company-specific page for Biogen, and Yahoo's analyst estimates. So those are really helpful. The other thing we're going to be taking a short look at tonight is another menu item under Tools that's called Notes. So one of the things that I like to do is make a note when I'm making judgments. And if I clicked on Notes and then I click on New Note, I can add a subject and description and then save that note. So I'll be doing that for our company profile information so you can see how that works. You could make as many notes as you'd like. There is about 1,000-character limit on each note, but you're certainly welcome to cut and paste from other resources and paste into there. So you can also update the note by clicking on it and then retyping and adding an update to the note. You can delete the note if it is no longer applicable. And you can print the note with your stock selection guide. So I would go to Print, and this panel would come up. I would select to append the notes, and then generate the PDF by clicking on the blue button here. So that's how you print the notes. Okay. So let's go live to our stock selection guide and get started. Before we do that, Ann, do we have any questions?
No, Susie, not at this time. I think we should dive in, and I'm sure we'll get a few.
Okay, awesome. So I am going to swap my display over to our member homepage, and you will see that. So once I'm logged in as a member, this is what I'm going to see. And we're going to start out with one of the most basic pieces of research, and that is how to find a stock to study to start with. So one of the things that we have available to Better Investing members is a wealth of stock ideas. And when I'm here, I'll point out a few places where you can go to get stock ideas. I'm going to scroll down a little bit, and we have most active stocks in our community. These are taken from some of my iClub Club Accounting data. So we see the number of buys and sells within the last 30 days, and that can give you an idea. A couple other great places for ideas are under Tools and Resources, First Cut. So First Cut is a community idea that someone has already done the stock selection guide for you, and you can take a look and open one of those up and see what somebody else has to say for that company. Now, First Cut is also delivered every 2 weeks by email, so hopefully you guys are all receiving that. If you're not, you can send an email into our member services department and they can get you set up. Either we don't have your email address correct or you are unsubscribed from the list. Our Better Investing magazine here is a 10 times a year magazine, and we will publish a stock to study or undervalued feature. So make sure you're looking at that when it arrives at your doorstep. That's always a great another reference. And in addition to those two, stock to study and undervalued, there may be a ton of other ideas within the magazine itself. So that's a really quick intro to some stock ideas on our website. We actually have a whole webinar where we're talking about screening and stock ideas within the community and on the website. So either check it out on YouTube or wait till it rolls around again live and check that out. For now, we're going to move to our tools, and to get to the tools, I am going to click on the My Studies button here and open the tools. So I'm going to do that, and then we'll watch that load. And you will see a list of all of my studies, just because that's where it starts out. But I'm going to go to the Stock Ideas tab and show you that we have a couple different ways here of getting some stock ideas. One of the interesting ones is this ticker heat map, and this is only for SSGPlus users. But if I click on the ticker heat map, it shows me a very colorful map, if you will, of the most popular companies within the last 90 days. These are the 100 most popular companies studied within these tools in the last 90 days. They're sorted by sectors, or organized by sectors, and what this tells me is the larger the box, like Gilead or Apple, the more studies have been created. So if you can see that black box for Apple, when I hover over, we'll see that 1,167 studies have been created in the last 90 days. The smaller the box means less companies. So Hormel here has had only 120. So that gives you a popularity idea. The colors here represent the relative potential return. We'll call it the relative favorability. It doesn't mean buy or sell. So we're not going to go out and buy Qualcomm, and we're not going to go out and sell Stryker. It just means that Qualcomm might have a more favorable potential return as compared to Stryker. Now we grade these, if you will, by examining the anonymous judgments that people have made when they have done those studies, like the 132 Stryker studies. So another great way of looking at for a potential stock. I see my targeted stock is actually in the list, Biogen, 338 studies in the last 90 days. There's another way to get stock ideas here, though, and that is I can search for them by searching for a particular targeted growth rate, a particular sector. So I would choose any one of these or any combination, and let's say I want a small company in the consumer cyclical sector that has growth rates of greater than 7%. I would get a whole big list of those, in fact 243 of them, and be able to choose from them. There's also a list of predefined screens. So our company tonight was one that came from, or is actually existing upon, the value screen. So all I needed to do was click on that, and I can get a list of value stocks that meet the criteria. What is that criteria? Well, we can examine that by looking at the criteria definitions. I'll tell you, I've pre-picked Biogen. The scenario is that, I didn't know anything about it, and this is a real-world scenario. I have homework from my investment club. So I actually had to do my first cut and analysis on Biogen. So that's what you're going to see tonight also. So that's one way of, or another way of getting a stock idea. And a great piece of research that's already included in our tools. So let's get started with our analysis. I've mentioned a couple times that we're going to do Biogen, and I've mentioned that I did a first cut on it. Now this first cut is available in the handouts, and it's a completed analysis. But our first cut form asks a number of questions, and that's going to frame our discussion for tonight. So I think I already have, let's open a new one. I have an old one open, but let's open a new one. And you'll notice that I have multiple tabs open here at the top of my screen. You can have that. This tab, I know, happens to be an older, my first cut version of Biogen. I'm going to close that out. I have another example I'm going to show you later on Gentex. But so here's Biogen. Nothing is filled out yet. The tool is automatically populated with data, which is the single most powerful feature of research and data we have available to you. You don't have to do that work. For example, I recently looked up some data manually for one of our customers, and I have to tell you, going through annual data and quarterly data just for 1 year and picking out those two pieces out of two different, it was a year-end filing, and trying to put it in a tool like this, it took me about an hour for the last year. So having this show show up automatically is incredibly time-saving and very powerful. So that is item number one. And we're going to do a lot of our research from the things that we have available to us within the tool. Let's start with our first cut question that we have. And it asks us, why do I consider this to be a high-quality growth company that should be investigated further? And it asks for comments on historical sales, earnings, pre-tax profit margin, return on equity, and debt. All great questions. We want to make sure that the company has meets some basic growth and quality indicators before we put the time into forecasting. Now, what kind of research do we have here that we can apply to that question? Let's start with that. Well, first off, we're going to look at the visual analysis, which is a cornerstone of our methodology. Is there growth, meaning are the lines going up over time? Are they relatively straight? Because we want some consistency. We're going to be looking at projecting, and we're going to be referencing some history. So if history is not consistent, we put more risk into those projections. So I am satisfied that this is sufficiently straight. So there's a question about why 2006 wasn't kicked out. Well, I got to tell you, this is as the study comes in. I have not done any modification, and I'll tell you, we had much lower earnings back at that point. I could remove it as what we call an outlier. It's old enough. It's not like the others. It's a deviation from the existing trend. I could remove it as an outlier. Honestly, I don't have to. The study's going to pretty much work the same either way. So that is one technique that you can use, that the tool will help you. So we're going to look at this. Are they relatively up and straight and relatively parallel? Yes, they are. I'm pleased. I do note that these black lines, which represent price, are a bit cyclical. So they are a little bit flatter. There's a little trough, both the recession as well as the fact the company didn't have a great amount of growth in the years between 2008 and 2012. And then it had more growth, and we see the price bars robustly moving up, and now we're kind of leveling off. So there's a story there we need to find out, and our price bars have kind of leveled off too. So are they perfectly straight? No, but I'm still okay with that. It generally follows the trend of the other data. So that's pretty good. Is the growth robust enough? Well, we have had over these last 10 years of financial data, 15% sales growth. Honestly, that's pretty good. This is a large company of 10 billion or more with sales. It's probably on the little bit smaller side of large, but nevertheless, it's a large company. Historical earnings growth rate have been 34%, so that's very nice. So I'm happy with those broad numbers. If I want to look at the last 5 years of growth, I can do it one of two ways. I can, and here we're still talking about research within the tool, I can get rid of the oldest 5 years of data by clicking on the graph, and then these growth numbers here in the table will recalculate. So I can see that those years between 2011 and 15 have produced a revenue growth rate or a sales growth rate of 23%. That's terrific. I'm very happy with that. The last thing I'm going to look at for growth rate right here is that let's take a look at the quarter over quarter. So December 2015 compared to the previous year. Gosh, sales growth rates are not that robust, or they're not like the 15% to 23%. Is that acceptable? Well, I got to tell you, to me it is. It's my bogey for something like this, and a general reference is about 5 to 7% for a large company, so I'm okay with that. I also see in the past, and this is going to be important to me for this company, is that the company has weathered something like this before. In between these years of 8 and 11, there was also about a 7% growth rate, and you know, they did fine. They didn't go out of business. They still made money, so things are looking up. On the earnings side of the world, we got 0.7%. So these quarterly figures are also another great research point for us. 0.7% is probably a little less stellar than I'd like. However, I'm going to take a look at I'm going to go to the quarterly data and look at this area of research. And what this is going to tell me is how have the quarterly data been flowing. And right away, I'm going to see that they've had some terrific numbers in the recent past. Now these are the trailing 4 quarters. I'm going to show each data point separately here. And what I can see is that December 2014 was a pretty robust quarter. And so to compare this December with last December is a bit of a hard sell. Now if I scroll down on the quarterly data, I can see the exact number, and that was 3.74 compared to 3.77. If you're interested more in quarterly analysis, we do have a webinar available for that. If you'll go to our store, it's available there. So my point here is that here, looking at growth rates, 0.7% might seem disappointing, but I'm okay with it. All right. What other pieces of data do we have available to us to kind of analyze growth here? Well, one of the more powerful ones is comparing our company to its peers. And we have a button here that says View Peer Data. If I click on that button, it brings up a panel. I'm going to scroll down a little bit. And shows me some pre-selected peers along with my company. So my company is Biogen. The pre-selected peers are Gilead, Celgene, and Shire, and they are pre-selected because they are in the same industry and they are of a similar size. So that's just a point of information for you. So when I look at growth rates, if my company is distinctly lagging other companies, maybe what I'm okay with is not really okay. So I can see this visually, and I can see the data down here. So while I have a pretty robust 15% growth rate, we see that Gilead and Celgene have been spectacular. Great. I'm still okay with 15%. Shire is at 14. I can also look at that for earnings. When I look at, what are these various growth rates? I got to tell you, if Biogen is a quality company, I'm pretty happy with their historical growth rates anyway. But this comparison to peers can be incredibly helpful to you. Now, what if you don't like that set of peers? Because sometimes it's just not as the automatically chosen peers are not what you would have picked. I'm going to show you how you can use research to find different peers. And there's a couple of ways of doing that. We can go to our company summaries that other companies have put out. So for example, like Google Finance, and when I click on here, I'm going to open up another page. Google Finance will show related companies that we might want to consider as peers. You can pop a couple of those in there. And then we have, let's see, company summaries, Yahoo. And they will show in their summary page, if I scroll down, that there are comparison companies to be listed here. And you could try those out as well. In general, I'm pretty happy usually with the automatically selected peers, but if there's a company that you know about that you'd like to swap in, feel free to do so. The other one that I would definitely remind you of is that usually in the company's 10K filing, their SEC annual report, they might list, I said usually, but the company may list competitors there. We make it easy to get to that 10K filing. If I go to Research, Filings and Transcripts, and then select just the 10K filing, what it will do is go to the pre-selected link, and it will make it easy to get right to your company, Biogen. I'm watching to see that you guys can see this. And the 10K filing type is already selected. So if I wanted to look at the last year's 10K, I would click right here on Documents. I would open the file. And yes, there's a lot of words, but I'm going to show you a trick. I'm going to use my Control F key. We did a Ticker Talk segment on this, how to quickly search in web pages. I'm going to use Control F to bring up a search box, and I'm going to search for the words competitor and or competition. They won't use the term peer. So I do see the word competitor in here. I'm going to go down to where what I'm looking for is if they're going to name the competitors. So usually they will. These guys might not. And I'm just kind of quickly sorting through competitors. So it's not incredibly obvious in this filing, but you might be able to find it for other companies like that. So once we have our selected peers, this peer data is pretty powerful. Now moving on, if we're still satisfied with our growth prospects, moving on, let's take a look at some other indicators of quality. And those are taking a look at our percent pre-tax profit on sales, percent earned on equity, and debt to capital. The most powerful research that we have here is the data that we provide you and the trend graph and the 5-year average. So we have highlighted the last 5 years and averaged them out. And what I see here for pre-tax profit is that it's pretty robust at 34%, and it's growing. So they have managed to increase their margins year over year, with last year's being terrific. Definitely over trend of, if trend of the last 5 years or average of the last 5 years is 37 and they're at 44, that's terrific. Return on equity, let's take a look at that. We would love to have a company that had at least 15% ROE, or return on equity. Here we have much more than that. We see from the graph that it's been steadily increasing year after year. And in fact, our latest value is over the 5-year average. I'm great with that. Now let's take a look at debt. So debt is red. And is this alarming? A little bit, so I had to look into it. And I'll tell you, what we see here is a trend of stable numbers in the mid to high teens, then it went a little bit lower, and then it jumped up to 41%. So I said, why is that? Because if I'm not buying into why they did this, maybe my job here is done and I'm not interested in Biogen. So you know what I did? I went back to my SEC filings, because when a company takes on debt, they have to produce an offering for it, and they kind of have to tell you why. So again, back up to the research link, down to filings and transcripts, and this time instead of the 10K, I'm going to all filings. I do that, the site comes up, you'll see it's Biogen, and this time I don't have any particular filing type filtered. It's everything. So it might take a little bit to get comfortable with this, but what I'm looking for is something in the last year that has the word prospectus in it. When you're issuing new debt or new shares, it's got to have a prospectus. So I looked at this prospectus here and saw, when I opened up the document, that, oh look, here are all of the new the offering for the debt. So they've got various long-term notes. Good, I found it. Now I'm going to show you another trick. I'm going to do Control F, and there's a term called use of proceeds that tells you what they're using the debt for. So I'm going to go through those and see if I can find that. Oh look, the net proceeds of the offering are about $5.9 billion. We intend to use the net proceeds together with cash to fund share repurchases of our common stock under our $5 billion stock repurchase. So they're borrowing $6 billion. They're going to use 5 of it for share repurchases. Okay, I'm going to take that under advisement. That's not an unusual use of funds. I like that they're very specific in what it's going to be used for. So at this point, and if you'll note my comment in the first cut, it was, I'm okay with that. They have a history of managing debt wisely, and I'm going to assume at this point that they will, given that they've got this long-term debt, which goes out many years, that they're going to be able to manage that wisely. So at the end of the day, we have looked at a lot of different research that's baked into the functionality of the tool that comes from the data included in the tool and some research links available from the tool. When we're looking at, going back to peer data, when we're looking at these evaluate management options, we can also look at those through peer data. So we can look at percent pre-tax profit on sales with our peers, and what we see for Biogen, which is in black, that it's right mid-pack in terms of percent pre-tax profit margins as compared to peers. So Gilead has got some spectacular margins right now. That may change for them. Their landscape's changing a little bit. We're seeing Celgene and Shire with 21 and 21, and I'm perfectly pleased. These are robust margins. This apparently is what the industry is typically runs at, and Biogen has increasing margins. So good. Return on equity, same thing here. We see Biogen with increasing return on equity. Gilead has got a spectacular return on equity right now. Celgene is at 26% on average, 28%. So we're doing well with that. And debt to capital. So this is a little bit interesting. Celgene has quite a bit of long-term debt. Gilead has nothing. Shire is less. So it would have been perfect if these guys had totally less debt, but they did take on that extra piece here, which kind of puts them mid-pack on where they were before. So use the peers to look at quality factors also. And for me, that pretty much does it. If I have other questions about where I am with someone who's very experienced in profit margins and so forth, and they are looking, they want to look at other margins or other ratios, I'm going to point you to the fact our research links go to things like key statistics. So if I go to Yahoo Key Statistics, we will see that we're pointed to a page where there is a number of financial highlights, both leverage ratios, profitability ratios, and things like that. So avail yourself of these extra links if that makes sense to you and that's what you're used to using. There are also financial statements that if you want to calculate things yourself, we have links directly to financial statements, the Morningstar financials and the Reuters financial statements. So I'll just show you how that works. We'll go to Morningstar financials, and then you can see how that automatically comes up. And there's key ratios available here. And a number of other links that you might find interesting there. So I'm going to get rid of some of these other tabs. Okay, moving on. I think we've answered that question, and since we've deemed the company suitable for further analysis, we need to actually get to know it a little bit more. We went on our first date with it, as I was telling Ann. Now we need to do a second date and get to know it a little bit more so we can start forecasting and projecting sales, earnings, and PEs. So Ann, at this point, do we have any questions?
No, I think we are pretty much caught up. People are listening, and the back room is doing a great job keeping up with the questions as well.
Okay, great. So our next first cut question is briefly describe how the company makes money. And that's exactly what we're going to do. Briefly describe. One of the things that you can do is mouse over this title bar. If you're doing a really what we call quick and dirty study, you can get a little bit of information here. So we learned that Biogen is in the healthcare sector and the biotech industry, and it's what's called a biopharmaceutical company. So it's doing some really advanced science in the medicine and pharmaceutical space. So they are looking at therapies to provide to patients for neurodegenerative, and I'll tell you, I'll cut to the chase, that is multiple sclerosis, hematologic, and autoimmune. So they've got hemophilia, MS, and I think other one might be rheumatoid arthritis on there. So that's a really quick one. The other place you can go that is available through research links are the company website, and let's show you how that works. If I click there, I'm going right to biogen.com. Now, when you get to a company's website, you want to look around for investors or investor relations links. If you are on a site that is pretty business-oriented like this one is, you will find it usually in the header or easily available in the footer of the homepage. If you are on a commercial site, so let's say you're studying Amazon, you're not going to get an investor relations link at the top of Amazon's site. You will have to find a link that's usually in the footer that says something like About Us, and then you'll easily get to that link. So when I'm on the investors or on their site and I click on investors, I will be able to read all their press releases. I will have be able to see presentations and so forth, which will surely give me more information about the company. I'll point out that a number of other websites also give a really nice summary. And if we go to company summaries, we can see like the Yahoo summary, which if we go to profile here, that will give me a nice profile and the drugs that they are associated with and what they are used for. The company's 10K also does that. So I believe I closed that out. So let's take a look at that again. Filings and transcripts, and the 10K has to have a business section. I'm going to open that one. And the business description is usually at the very top, and it's item 1, business. So they tell you what they're all about. Now here's what I'm going to do. I'm going to show you how to use our notes feature. I'm going to go back to SSGPlus and go to Tools and then Notes. And that will bring up the Notes panel. And I'm going to make a new note that says, I put a subject line in there of company profile. Now, in the description field, I'm going to cut and paste part of the information from their 10K. So let me see if I can grab all of that data, select it. I'm going to do a Control-C, or I could have done a copy. Come back over here and paste it. Let's paste it as plain text. And then I'm going to save it, and now I have a note. I will be able to print that out later. That is the gist of documenting your study. Now you could put whatever you want to. Common things that we have in notes are description of the company, like I just did, or your justification for your projections that we're going to do in a little bit. Because I can guarantee you, if you come back to this study in a year, you're going to wonder why you projected what you projected. Now, I have it documented in a first cut, but not everybody does that, although we wish that they did. You could contribute to the community, but this is a really nice short way to document your projections. Okay, so we have the information about how the company makes money. They produce drugs to handle various different conditions. If we go back to the 10K and really read it, we're looking for a number of drugs that deal with multiple sclerosis, a number of drugs for hemophilia, and plaque psoriasis. So it wasn't rheumatoid arthritis. This was the autoimmune disease. Now, they also have a couple of different revenue streams. They have drugs that are in the pipeline, but this is the basic information on how they make money. Now, the next steps that we need to do are to start projecting our sales and growth rate. And in order to do that, we need to examine in a little more detail what the growth drivers are for the company. To be able to do that, we're going to dig even a little deeper. We are going to get to know the company a little bit more. A couple of research points for you to examine growth drivers. Look at where the company currently makes money. Read their 10K, read their press releases. If you go to research and filings and transcripts, you'll get at their press releases. An easier way is going to go to the company website and view all their press releases. They will tell you. Other great ways, if your company has it, are to look at presentations. So I'm going to go all the way down to presentations, and it will say see company presentation, and I'm going to scroll down a little bit more. There's a regular earnings presentation. I'm going to show you that often companies, especially medical companies, have presentations that they are presenting for other people. And this is a great one that Biogen presented at a recent healthcare conference. And it has things like basic review of fundamentals, but they'll also tell you about their core businesses, the growth in the various product lines, and so forth. So please avail yourself of that. And to get there again, you would go from research to company website and then look for investor relations. Analysts will sometimes provide a commentary, and sometimes you can glean some of that through the Seeking Alpha call transcripts. So these are earnings call transcripts. And so for Biogen, we see them all listed here. I can open one up and review the information there. So please take a look at that. Those are some of my favorites. Sometimes I play them or read them and print them out in off hours, or I'll listen to the recording of the conference call on my car or something like that. So take a look at all of those items. I'll point you back to the company's 10K, where they will talk about the business. They'll talk about key developments. They will talk, if I go up here, I can show you the index, if you will, or the table of contents for the 10K. Item 1 was all about the business. Item 2 was risk factors. Item 7 is a little bit fascinating to us geeks, and that's the management's discussion and analysis of their financial condition. So those are my top pieces in addition to the financials that I would look at in a 10K to learn more about that company and what they do and their growth prospects. So once we have all that, we're kind of in the point where we can think about putting a number on paper or a number in computer, if you will. So I'm going to start that process. If I click here to enter a sales forecast, I can simply enter a number and be done with it. I could guess. We're not going to advise you to guess. So let's take a look at a couple of other reference points that you have available to you. You have the historical data. You have 15% historical growth rate. You got about 23% in the last 5 years. You got 7% here. You've got a Morningstar analyst estimate of 5.6. If you want to go out for other reference points, I'll point you to research and under Better Investing and member sentiment. So member sentiment is a listing of those 182 completed studies in the last 90 days and what everybody estimated for them. Use it as a reference only. They are anonymous. You don't know if they're beginners or non-beginners. and but it's a nice little reference of people, like-minded investors that you can point to. We also have links to analyst estimates here. So for sales estimates, you really only have a couple of options. You've got the Morningstar data that comes into our tool, and you have Yahoo or Reuters. In the background, they're the same data. So Yahoo is redisplaying Reuters data, if you will. They display it in a little bit different format, but here we have a revenue estimate, and the next year it's 5.4 and 6%. So when I did my first cut, I had all of these pieces come together. I put some attention to the recent data, which slowed down our analyst estimates here, and I'm going to go with something that I think is pretty conservative, which is 6%. I put that in there and I update my study. So your job is to aggregate all of those things, use your research, and update your study. And I see 6% come in here. Next step, in our next question, well, actually that covered the question, project a growth rate for sales, and why did I select that rate? Discuss where the future growth will come from. So that is part of my first cut commentary based on the research that I did in the growth in their various product lines. I have some very conservative expectations for growth, and then once we learn more about their pipeline and how that's coming to fruition, like an Alzheimer's drug that they have and so forth, we might see their growth rate kick back up. Okay, moving on to earnings. Our next first cut question is projected growth rate for earnings per share, and why would I select that rate? Well, I'm going to deal with a number of different reference points again. So I have the estimates that I could get through Yahoo, and I'll go to that tab and see that for earnings, I actually have to scroll all the way to the bottom and see that for next quarter, next year, we're in about 9-8% range. In the next 5 years, they're saying 9%. The Morningstar consensus estimate is statistically higher at 14.7, and here you get a flavor for how analyst estimates can vary. So again, just treat them as a reference. We could also take a look at our member sentiment. But one of my favorite methods here, and it's a piece of research and a tool built into the tool, if you will, is what we're going to call the preferred procedure calculation. And this is a mini business model. So I'm going to take that 6% that I forecast, subtract out expenses, subtract out costs for taxes, and divide by shares outstanding. And out of the gate, it says, hey, based on a 6% growth rate, you're really only going to achieve 3.9% growth rate. Well, there are some modifications that I'm going to do because I had to look at this and say, well, if I'm coming up with 4% and the analysts are at 8, 9, 14, where's the gap? So let's take a look at pre-tax profit margins. That's one of the #1 reasons. And if you need to know more about preferred procedure, we do have a webinar on that as well. So I'm going to skip through this pretty quickly. But when I look at my graph, our profit margins have been rising. And so while 37 was the last 5 years, 44 is what they achieved last year. I also noted from my research that they did a restructuring. And the company gave us some guidance. So I am going to close this down and show you how I got to the company guidance. It's in their press release. We could go here to the company website and see that. My quick way is to go to the research tab, pull that down, and go to filings and transcripts and all of them. And I know, just because I do this a lot, that an 8K here is a press release. And I think that was also in their 10K though. And 2.02 and 9.0 is the type of filing that means a financial press release. So that is I need to go to the larger file that actually says press release. So this is the press release that they put out on January 27th. Down at the bottom, I noted that there was guidance for the rest of the fiscal year. And they give us some guidance about what revenue is going to be. It works out to be 4% or so. R&D, no, this is just for 1 year. R&D expense is expected to be about 19 to 20%. That's about in line or even less than they're spending now. SG&A expense, which is another type of expense, is expected to be 17 or 18%, and that is about 1 to 2% below what they're spending now. So what they're telling us here, and they pointed out very specifically in their analyst conference call, is that they expect a couple of points of margin improvement. So what I did is I said not only was I going to take 44, I was going to make this 46 and give that hope that they can achieve that. Now, they've already almost gotten there. They have their restructuring, so I felt pretty good about that. The other thing I noticed were diluted shares outstanding. So we see a big trend in reducing shares. We also know that they did another huge share buyback with that $5 billion, which brings them from 231 down to 220. They haven't announced anything else, which I checked for in a press release, but they do have a history of this. So I could have kept this at 220. I decided to say that they were going to get a little bit more aggressive with this, and we're at about 8% here. I ended up going with something like 8.5%. Now this is less than what the company has achieved, so I feel pretty good about that. Companies are very keen to be consistent to provide consistent earnings. And they have a number of pieces at their disposal, like increasing margins, reducing share count, and so forth. So those are my sales and earnings estimates. Our next questions deal with valuation, and we'll look at the research associated with those. But before we go on, Ann, are there any other questions?
Sorry, I lost my button. No, ma'am. We are actually doing well, and I'm not going to take us, I'm answering one right now that's more of a study question than a research question. So,
all right,
let's just keep moving.
Let's move along. So our next first cut question asks us, project a high PE, and then why did you select this value? When we're talking about valuations, we are going to take a look at our second tab here, valuation and return. So we have a bunch of data included here that we can use for research. First off, we are going to look at historical PE values. Now I have a table of them here under high PE and low PE, and they're pretty high. I mean, the average is 30. Our low PE average is 17, and then I see my current PE is only 16.8. What's up with that? Our current PE is lower than our average. If I go back to Analyze Growth and Quality, where we see the price mapped out, we can see that that's the case. I mean, we're kind of at the bottom of our 52-week trading range. Okay, so now what do? I have like an unstable PE situation where this is going to be a little bit trickier, not easy, if you will. We have the tools for you. So not only do we have the 5-year data here, I can show you the PE chart here and bring up 10 years of PE. So I note that we've been lower than this. We've been low. When those growth rates were low, or perhaps it was recessionary, we had lower PEs. That's very typical. As growth rates decline, the market is not valuing your stock as much, and your PEs will be lower. But what do we use in this case? I have a couple of other reference points. I can take a look at this data. I can average some of it. I will tell you that a couple of your other reference points would be to go back to member sentiment and take a look at that. I'm sorry, we're going to go to Research, Better Investing, and Member Sentiment. And one thing you can do with Member Sentiment is if you click here, if you're in SSG Plus and you click on the Select All button, you can go to the bottom and see your numbers that have been averaged for you. Now you got 182 data points. I would say that the average is pretty statistically okay. It's not like you have two. But I'll also say what I noticed when I did this study is that we've got some higher estimates and some lower estimates. So again, just use these for reference. So I'm looking at something like 24 and a half here, and my low PE is about 16.7. Those are definitely lower than the numbers that I'm seeing over here. 24 and a half is significantly lower than 30. So I have another reference point for me, so that's great. I can look at my peers and see what they might be doing or what they did in that back in the day. And here's my high PEs, and I can see that Biogen has a fairly high PE. Gilead, its PE is going down. Celgene is kind of ratcheting up lately, and we have a higher ending PE from 2015. So I'm going to say I've got some higher, some lower there. I know Biogen's growth rates are declining. I also see that we're in the lower end of the PE scale. So what I did here is I said, you know, I'm going to go back to that other point in time that I had, and I'm going to take these middle values and come up with an average. So I explained that in my first cut, and what I did is I took the numbers between 2008 and 2012, I averaged them out, and I came out with a 25 for my average PE. So sometimes our stock selection guide PEs are a little bit more consistent and maybe a little bit easier. So this one I had to go back deeper into history. There are not a lot of references for providing PE projections from outside websites. The websites that we have linked to here are all free research websites. If you happen to have a premium subscription to like a Value Line or a Morningstar Premium or Standard & Poor's or another newsletter, you might be able to get a little bit more forecasting data. Value Line does produce a single point of a PE forecast. I'll tell you that that's one analyst, so just use it as a reference. You got a lot of different pieces here that you can compare and think about how you feel about that. So then we're going to look at the low side. So again, lower, you know, we're looking at numbers between 14, 12, 11, 12, and then 19, I believe it was. I averaged those out, and it came out to be about 14. I said, you know, we're not seeing anything like 14. I put a 14 in here, and what came out to be was a low stock price of $214. And we have a couple of other research and reference points here as well. So 214. Now in the last 3 years we haven't gotten anywhere near 214. The company doesn't pay a dividend, so it's not really attractive to dividend investors. If you're that kind of person, you can stop there and just make your decision. I'll tell you that there's another research link that we have which provides big charts, can show you PE data that is monthly PE trends. So we go directly to big charts. We can add an indicator that says PE ratio, or they have one that says PE ranges. Weekly for the last 5 years, and I'm going to draw that chart. And we can see how that PE has ranged. And, you know, we're definitely saying that in the last 5 years we've reached down into mid-15s and so forth. We have a value, we were looking at $214. Let's take a look at our plain old price chart by going to a stock charts weekly chart and seeing what well, I'm going to have to go to 5 years and see, you know, if we're at 214, have we seen that in the last 5 years? We really haven't seen the last couple, but yeah, it's out there a little bit farther. So I am saying that we're kind of seeing some of the worst. The general market could decline, of course, where it could go lower, but I am not terribly comfortable with 14, and I said I'm going to give them a little credit that they're doing a little better than they have in the past and go with 15, where my forecasted low price would be $230. And then I'm going to update my study. So you got a couple of reference points and research points there for you to look at when you're looking at PEs. So we have a high price and we have a low price, which means we can assess our stock price. So our first cut questions deal with high PE, why did you select this? Low PE, why did you select it? Low price, why did you select this value? I chose to just multiply my low PE times my low earnings per share forecast for the trailing 12 months and come up with a low price. You could have directly entered a low price in here, totally available. That method is totally available to you. So I'm able to explain that, and my first cut explains my logic. Now assessing our stock price. My next first cut question is, at that price, at our current price, the stock is a buy, sell, or hold. Well, the math is done for me. It's a buy. And the upside-downside ratio is 11.8 to 1. And which means there's a fair amount of upside as compared to potential downside. You know what? We could have seen that from our price chart, though, or our in front of the SSG, that, you know, we're kind of trading at the bottom of the 52-week range. But this puts a number on it, so which might be helpful when we're evaluating other companies. Then we go on to looking at potential returns. Now, another factor in potential returns is the amount of dividend return that's going to add to our price appreciation. This company doesn't pay a dividend. No dividends here, no payout. Payout is something that we should take a look at if we have a dividend-paying company. So I said I had a Gentex example, and I have that pulled up here. This stock, let's wait till you guys can see it, is Gentex. It does pay a dividend. So I'm going to go right to valuation return, and we can see the dividend history in this table. Dividends per share for the last 5 years, what the dividend is right now. So if you bought the stock right now, you get 34 cents per share per year. What that payout is, and that means what percentage of their earnings are they paying out as dividends. So what's interesting about Gentex is that it was a little higher in the past, and now it's a little lower. We have a great pop-up that explains it. So this data indicates the last 5-year average is 37%. That's actually our default. This piece of data that's in line with our current dividend says, as of today, they're paying out about 31%. It's just lower than the average. Our pop-up down here, where we can make a payout judgment, shows this to us visually. It also shows us some deviations from our trend. So visually we can see the payout looks very large back in 2008 and 2009. Well, the reason is they didn't have a lot of earnings, but they were committed to paying the dividend. So they made 22 cents of earnings in that year, and they paid out almost all of it, 21 cents as a dividend, thus rewarding the shareholders who stuck with them. Same thing for 2009. So the payout as a percentage of earnings looks huge, and then they get back to normal business. Except normal business now looks a little bit lower. So you have the opportunity to change the default, and you didn't have to leave the tool to look at much else, and maybe you want to go with something like a 32 because it's more reflective of recent history. So that is something that you'll want to take a look at if your stock pays a dividend. Now, in addition to the data that's in the tool, you can look at company guidance. And I'll tell you that sometimes in a press release, they will announce that they're increasing their dividend and or this is the 100th year they've paid dividends. When you see a company like that, let's call it a General Mills, we've paid dividends for 400 consecutive quarters or something. These guys are proud of that dividend. They're going to protect it. So you have you can forecast pretty well what your payout is, and therefore how that may or may not add to your total return. For Biogen, without a dividend, there's no additional return, and we see that the total return is potential total return could be about 17% if we bought the stock at this price. So I have made my way through a stock selection guide and used a ton of research links to get there. So I hope you guys can all appreciate all of the different pieces within the tool, as well as within these links that can help you complete the study without having to go too far outside that realm. This process is great, especially when you have a small company which doesn't have a lot of outside analyst coverage. So I'm always running up against club members who say, what do I do if there's no value line report on a particular company? Well, I lead them right to this process and say, here's all the pieces where you can get a ton of different reference points, and you can be much more confident in your projections, and you can do them yourself. You can be your own analyst. So with that, Anne, before we close out our webinar, are there any other questions?
Well, there are a couple questions on those notes, and I know you haven't had time to really keep updating those, but maybe somebody's asking about how do those appear when we are looking at our stock selection guide?
Oh, great question. So I have one note in here. I will make a very quick new note so you can see two. So my sales projection, and this is, you know what, I have my first cut open. Let me
copy
and paste that. And we'll put that in there. I have a lot of windows open here, so let me do a decent job of my copy and paste. And yes, I'm going to paste that in there and save my note. And we will have my sales projection show up with the other ones. And this is just the text I used in my first cut. So the question was, how does this show up when I print it? Well, let's do that. I'm going to click on Print and append the notes and generate the PDF. And this is going to take a little bit, so we're going to see a little, it takes a while to put this whole PDF together in the background.
Well,
but
while we're waiting for that, well, go ahead.
Okay.
I don't want to distract you, but there's a related question.
Okay.
Oh, Charles knows the answer. I don't know this answer, so I'm going to let you answer it out loud. Do the notes export with an ITK SSG?
Yes, they do.
Good job, Charles. That was his answer.
You got the right answer? Yes,
yeah.
They do.
But I guess I haven't done that, so I wasn't
yes,
sure.
They do. That is the advantage of using ITK.
Perfect. Okay.
If you are sending your study to somebody who has Toolkit, use the ITK format. So here we see study notes appearing as the third page of our SSG. Our printed PDF. I'm going to make this small, and you're not meant to read it, but the point here is you can see the PDF grew from 2 to 3 pages. So up here at the top we have the front side, or the visual analysis. In the middle page is for the valuation and return, and in the PDF form it's got some of the quality factors. And then the third page has the notes. If you have no notes, you only have 2 pages. If you have notes, you get as many pages as it takes to print all those notes.
And I'll just say that yes, absolutely. And using those notes along with the research, I mean, I've started using them more as I'm watching stocks and I'm tracking my judgments. And if I change a judgment, I want to make a note as to why I did that, so I can go back and review that. So great use. Notes and research go hand in hand.
Yeah, if you can get into that discipline, it will be incredibly rewarding if you go back and take a look at your study. So with that, do we have any more questions we need to answer before we wrap up?
No, I think we're good.
Alrighty, let's get back to our presentation here. We did go live, and I will point out that there is a tab here that I didn't go over tonight, but has a question mark on it, and it is our Help and Information tab. So if you are in the tool, you can find links here to our webinars, to our quick start guides, which are, really quick and easy ways of getting things done, from CoreSSG or SSGPlus to a quick start for screening and stock ideas and a quick start for portfolios. We have some reference materials, so if you're wondering about the difference between Core and Plus, that's there. We have some guidelines for beginners and a calculation reference. For those people who want to know what's behind the data, there's the calculation reference. All right. And then we have links to our frequently asked questions and feature requests. I will point out again, if you have more questions and need more information, either about our process, I'm going to guess there's a lot of process and methodology questions and forecasting questions, use these resources. I'm also going to bring a huge shout out to our convention staff and educators there. We're talking 3 days of talking about stock selection guides, long-term investing, and becoming great investors. It's a high-energy event held this year in Washington, D.C. in May. You can also ask your local chapter or club for a mentor for the process, or perhaps a club visit. And there's also a wealth of information in our Better Investing magazine. We didn't get too much into the various unique features of the tool and how they might be changing. But if you're going along and you're using the tool and you have a suggestion, visit us here at feedback.betterinvesting.org, and that link is also in our Help tab, and suggest something or vote on an already existing suggestion. If you have a question, the FAQ site will probably be able to answer your question. Go to the faq.betterinvesting.org and start searching. If you're interested in learning more about what we have to offer and being part of another live webinar, these are our upcoming webinars. Comparison Guide is next. What's New in Tools? That'll be after Bink. And then a new one for us, we're going to hold a Tools Q&A webinar. We'll probably look at common questions from other webinars, but please show up live and ask your questions, and we will do live demos and answer those questions. And that's scheduled for June. Any other additional questions or comments can be directed at our Member Services Department, service@betterinvesting.org, and feel free. They answer a lot. They're very knowledgeable, and like I said, feel free to write in there. You're usually answered within a day in that if you email us. So any other questions before we end our presentation?
No, there are not. Just the great jobs coming in, Susie.
Well, thank you, everyone. Thank you, Anne. Thank you to our terrific backroom staff of yourself and Carol Thine, Charles Bard, Joan Loken, who are all volunteers within our community. And I believe there's a survey as you exit, so if you happen to hit that survey, please feel free to fill it out and give us feedback on our webinar. Thank you.